This specific video is for all the amateur investors, my all amateur investor friends who is yet to know what is net profit and whether they can base their own investing decision based on net profit. Well, having said that, net profit is one of the criteria for basing the investing decision, but not the only criteria. Net profit, when used in conjunction with other criteria, makes it more meaningful to make your investing decision. But nevertheless, in this particular video, we are going to see these two aspects: how to calculate net profit and how to use net profit to base your investing decision. And finally, we are also going to see which are the investors who use net profit to base their own investing decisions as well. So first things first, subscribe and share it to your friends and colleagues who may also gain advantage from learning this aspect of net profit. So coming back to our topic, that is net profit, the way it is calculated is the company, upon selling all the products and services in the market, whatever income it has earned, earns it under a head called as the revenue. And then it subtracts all the expenses, whatever it has incurred, towards the cost of raw materials, cost of physical assets, cost of non-physical assets like copyrights, trademarks. It might have also incurred towards labor costs. It might have also incurred towards paying taxes. All these aspects of the expense is deducted from the revenue to get finally what is called as the earnings of the company, or in other words, net profit of the company. So net profit, as we have now just seen how to calculate net profit, let us see what is net profit margin. So when you talk about margin, it's something which we need to have a numerator and denominator. So the numerator is the net profit and the denominator comes is the sales or the revenue of the company. That will give you the net profit margin. So of course it has to be in terms of percentage. So you have to finally multiply by 100 to get you the actual percentage amount. So now coming to the next topic, how we can use net profit. On what basis can we use net profit to base our own investing decision? Now, when we see the net profit of a company, we do not see it from a standalone perspective of a specific year alone. Well, the specific year alone is important, but in conjunction with all previous years as well. It should be used in conjunction with the previous 5 years. I would recommend at least 10 years maximum, because in that 10 years, the company would have faced some economic crisis, at least one or two for definite. So that will give you an idea of how the company has performed during those periods of crisis. It will give an indication whether the net profit has been worthwhile, significant enough, even though the crisis was existing. So now what we do is we check the net profit for every year, this current year and also the previous 10 years, to see that the net profit margin has to be at least 15% and above. And second aspect, the 15% net profit margin should be consistent over a period of 10 years. Also, along with consistency comes growth. The net profit has to increase consistently year on year, again by a percentage of 15%. And that will give you a company which is having a significant durable advantage over its competitors. And you won't find many of these companies. Hence, it is important to identify that one or two companies which are worthwhile to invest, having this particular growth trajectory as well as the significant profit margin, so that you can invest in a durable company which you don't have to, knock off your sleep on. You just relax and you're earning your net profit while you're sleeping, like Mr. Warren Buffett says. So now that you have known how to use net profit to base your investing decision, well, this is being used in conjunction with a lot of other criteria and a lot of other parameters as well, which is based out of balance sheet as well as the cash flow statement. This I am explaining to my mentees in the mentorship program. It's a 7 days mentorship program which I'm sharing to a lot of people currently. So if you are interested, you may as well make it a point to join it by dropping a comment in the comment section. And so let me proceed to the last topic, last point which I promised. Who are these investors who are using net profit to base their own investing decision? I have read a lot of books and I've seen a lot of investors using The famous investor, the ace investor, specifically Mr. Warren Buffett, uses net profit margin to base his own investing decision as well. And as the criteria, whichever I said, consistency is more important. Consistency in the growth pattern is important. The consistency has to be an upward trajectory. Well, there could be times of economic crisis. How much percentage of fall in net profit margin existed during the economic crisis also holds important. A few percentage dips is okay, because a lot of companies have actually suffered during the economic crisis. So you can give it a benefit of whatever, relaxation, so that you do not miss out on such companies which have typically shown a growth trajectory which is reliable on. On basis that, then you can perform all other valuation methods, use the valuation and decide what is the price you need to actually invest the company in. So that is all I wanted to share in this particular video. In case you have liked it, please remember to like it and share it to all your friends and relatives as well. See you. Bye.